Welcome, welcome, welcome. I am so excited to be here tonight with you again and talk about our next accounting topic. For those of you who are new to my channel, I'm Margot Mastery, your heartfelt CFO. I come here every week. I share accounting tips, business strategies, and all of the in between. And for all of you tax diehards, we do that too. I'm going to take a minute and just double check that the tech is working well on the actual platform side. For those of you that come or on replay, feel free to say hello. We love to know that you are here and let us know that okay, awesome. It's working. We love to know who our listeners are. Keep the weekly DMs, the daily DMs coming. They make me so happy. We get to talk about the content. So tonight's topic is about common accounting mistakes, and I brought to you a special guest. And this special guest means a lot to me because he really focuses on something that I do all day, every day with clients is cash flow. David, hello. I'm so excited to have you today. How are you?
I'm really doing quite well, and it's great to be here with you, Margot. We've been LinkedIn friends for a long time. We met for the first time this week, and it's great to be here on your show.
Awesome. So, David, tell us more about what you do with your clients each and every day.
Well, I'd be glad to. So I do two things. Number one, I work with companies that are having cash flow challenges, and they don't have the resources like you, who are able to analyze and understand why they're having problems. Usually the symptoms they're seeing are not the root cause. So I'll go in and help them model and learn how to manage their cash flow, mentor them, and then teach them how to maximize cash flow and profits. And I teach accountants and advanced bookkeepers how to do cash flow advisory. So those are the two things I'm focused in on.
I love what you said around the symptoms, and I want to talk about that. Most clients come to me, I want tax strategies, Margot. I want tax strategies. I want tax strategies. If anything, this afternoon, I had somebody who I had a call with, and he wanted to know why another accountant told his fellow colleague that he could deduct something, but his accountant told him he couldn't. Now, he's looking for somebody who's going to side with him and say, this is what you can do. And I told him, if you have a trusted advisor, you need to listen to that trusted advisor. He was not happy with me. So what David has said is really, really important. It's the symptom. We have to see what we're not paying attention to in our cash flow, which is really where our attention needs to be. So his symptom was he didn't like the advice, and it was leading him to different things that he needed to do, that he was in the search to make that happen. The other thing you said, David, that was really, really important was around advisory work. Tell me about how that works with clients in terms of working from the advisory level.
You know, I'm the only person I know of right now who only does cash flow advisory. More often, if somebody's really familiar with cash flow, they're like you, that they provide full services. And so I'm teaching, there's a group of accountants and advanced bookkeepers out there who say, I want to help my clients. I didn't learn how to do that in school. Or they'll know a little bit about how to help them financially, but I've got a background in sales and operations and marketing and human resources because of my history, my work history. And I've been able to translate that all into different cash flow strategies that I'm able to provide to the people I work with. So that's where I'm teaching more than anything else. They just want to help their clients.
So what's shifting now in business, and I'm glad you brought that up, is that a lot of clients are coming for advisory versus necessarily just the doing. And
Yes.
I want to explain that to our listeners. Advisory level is helping you create a proactive strategy for your business versus being in a reactionary position when it's too late to really do anything. Now, it's when it's too late, it's like a car accident waiting to happen, because you're sitting there and you're like, you shoulda, coulda, woulda, but you can't anymore. In the new way, in terms of advisory, you get to look at your situation from a holistic perspective, from like that 100-foot view, and say, what am I doing and how can I get better? How can I increase and really zoom in on what I'm doing? A common theme is that I've seen this tax season, the extension season, regular season, is around not knowing the difference between accrual and cash. You may know the difference, but you don't really know what the difference is in terms of operating and how to really utilize it to make healthy decisions. Now, accrual is something that you accrue, and cash is what you have. It's tangible. So, David, I'm struggling for clients to actually make decisions on a cash basis, because when they're making their sales on an accrual basis, they think that's what they have the money to operate. What do you
Mhm.
do with all of this these days?
To me, it's a simple solution. And I'm going to assume most people here use accounting software that's got a toggle switch on the reports that say accrual based reports or cash basis reports. And you simply turn on cash basis reporting and show them what the reality of money coming in, but it's also the expenses going out. They both get screwed up, right? Because you can enter bills and shows that you've paid an expense this month, but the bank never left the bank, but you got billed for it. And so it happens. You get a phone call. Why didn't you pay me yet? What are you talking about? We paid you. It says right here. When in reality it's just like your invoice. You entered the invoice, but you didn't get paid. Well, you entered the bill. You didn't pay it out. Turn off accrual-based accounting in your accounting system. That would be my singular solution.
Why do you think people have it on? I always was curious. Like, I think that it just makes people feel good that
Um,
they know things are accruing. But in reality, I know it really just messes up business owners, because then the sales team has all these expectations that they're not met. And
mhm.
then when you need to get paid, like you said, the vendors, those can't get paid. There's just like this domino effect.
So I've got this almost conspiracy theory about why it happens.
Hmm.
What are we taught in school? Now, I'm not an accountant, but I've taken basic accounting, right? And I really learned how to do it in the workforce. We learn accrual based accounting in school, starting with accounting 101, accounting 102. And it continues if you're an accountant for 3, 4, 5 more years. And then what happens? The bulk of the graduates go where? They go work for large corporations, and they go work for um, um, large accounting firms.
I
And
was there.
yeah,
I was on that road. I hated it.
right,
I was miserable.
right. And a lot of them end up being miserable. I think the average lifespan for a new accountant going to a large accounting firm is measured in, one hand. Um, But what did you
I didn't
do
even know
day
that.
in day, right? What one hand, 5 years or less.
I didn't even.
Um, but you did accrual based accounting, but you also probably worked with larger firms. And so my
So,
hypothesis is
so
education and
listen to what he.
training.
So I'm going to butt in here. So listen to what
Yeah,
he's saying. A larger firm to be able to walk off an accrual basis. And
yeah.
again, in case you're listening and maybe you lost track to what we're talking about, accrual is, for example, you made a sale for $3,000 and you only brought in $1,000. So you're expecting the other 2,000 to come in, but you don't actually have it. It's not tangible. So it's important to realize that you only have the $1,000, not the $3,000. So I just want to keep reiterating so that as you explain it, people remember what this is.
And it's an easy way to say it is your accounts receivable is you haven't brought that cash in yet. But when you look at your sales, it'll be in the sales using accrual based accounting.
Because it's capturing the complete amount and
Yeah,
not the cash flow. So
right.
where I want to go with this to my business owners here is that understanding the cash flow is not the balance in the bank account, because there's transactions that possibly didn't clear. It's a gauge, but it's not current. The ideal scenario is when you have a bookkeeping and accounting system that is integrated with your bank, your credit cards, and on a regular basis, you have a system to follow. Now, what I've noticed this accounting season is that business owners are too busy with softwares and around the doing of the software and what software fits the business, and not enough working on the business to know something like this in terms of KPIs and knowing what your business is. So what I've created was these dashboards. And on the dashboards, it's a full view of knowing your business. So the first step is financial awareness. The second step is around your goals. The third step is KPIs. The fourth is around expenses. It's a way to work on the business every day instead of in the business. Now, the importance to this is that it helps you meet the goal and you don't get into these cash flow stunts. You get into the situations where you're building the income and we're not at an income problem, that you don't need to know this around income, what the actual income that you have versus which is tangible versus an accrual amount.
So, Margot, I think the big interesting thing to me is what is required on U.S. tax forms. I'm not a tax expert, but the U.S. government does not require you to report an accrual-based accounting.
You could do an accrual tax return, though. It's not recommended, but you could.
You could, but they don't require it until you hit $25 million.
Right.
Right. And so I'm going, wow, usually the US government would do the things in their favor, but it's small businesses. And most small business owners didn't go to school to do accounting. And we shouldn't expect them to do it. And quite frankly, that's what we're expecting when we're doing accrual based.
So hear what he's saying. It's creating an expectation, a lot of it, which is what I was actually sharing before. If you have a sales team, now what happens is that you think your sales team failed because your cash flow is low, it's hard to pay them, and all this domino effect happens from it. So cash flow crises usually happen because it's operating from wrong expectations and systems to build for the team. You want to build a system that you know for your sales team that they can actually produce. And you want to encourage them. But what's really, really important is around accrual accounting is that you're not making decisions off of it and you're not creating this pattern or like this sequence of events of things that happen from it. I see people really making harsh decisions because of it and getting into real binds. Is there other things that you think around accounting mistakes that happen that are important to share?
Yeah, it's not an accounting mistake, but can I point out there's a myth that the best way to get additional cash flow is to sell?
Oh, yes. Let's dive
Right?
into that one. Yep.
For most companies, you get into deeper hot water. You have to put cash out before you get the cash in from your new sales. So that's a myth. It's not a mistake. I don't know if you want to count that one.
It's fine. Go for
Yeah.
it. Talk about it.
Well, I mean, you're talking about the salespeople, and what pops into my mind is, wow, yeah, if you're paying commissions, we closed October about 15 days ago. And if you're paying commissions on October sales, but the invoices didn't go out until October 31st, and you're paying them today, you haven't received the cash to pay for the commissions.
Mm.
And you haven't received the cash to pay for the salaries for you or the rest of your team. And assuming your sales team is on salary plus commission, you haven't received any of the cash from those sales.
Hence why you need a system to run your business versus
right.
throwing spaghetti against the wall. This actually reminds me of a story, David. I had a client years ago who was in the bagel business, and very funny business to be in, or for me, because it's not my field, but he was also a real estate developer. And
did you say bagels? Real estate and bagels. Okay.
Right?
That's
it's
great.
so interesting. He was a funny guy. And, when you met him, you're like, oh, it makes sense. He didn't have any credit that he was running the store with. And it's basically cash flow, that the money that came in, he would be able to pay the bills. So now, similar to what he's saying, how the money didn't come in to pay payroll. Now, this guy who was running the bagel store, when the bagels would come in, he didn't make the money yet for the bagels. That's why he can never pay the bagel guy, because he literally needed the sales in order for it to come. He wasn't ahead. So he didn't have terms that was supporting him. What we did was we switched the terms with the bagel shop, with the bagel vendor, so that it gave him time to make the sales, so that he wasn't defaulting on the vendor agreement. Which really kind of loops this together, is that understanding your cash flow, not only does it help you pay bills, not only does it help you grow the business, it also helps you create better relationships for yourself and the business. Right before this, I was on a call about a program I was thinking to be in. Now, the program was a 5-digit program, and he would have took 4 digits from me. And I said to him, I wasn't happy with what I was prepared to put in, because the program was 5 digits. And I said to him, I wanted time to think about it. Now, in his mind, he could have made the sale at 10, but it was around the mindset of he wanted to make the sale, and he's like, whatever you can put into it. So going back to the bagel guy for an example, is that it was also lifetime access. So he was willing to spread out the money. It really didn't matter. But it was a larger company. Going back to the bagel guy, we had to switch the terms to convert them. So bringing this together is that you want the terms to support you, so that when you're able to make investments, you can actually pay the bill of the stuff that you're doing and create good relationships. I want a good relationship with this program that I'm thinking to be in. I don't want to be where he's making us an exclusion for me. And people do that when you don't know your cash flow, and it's not the progression that you're able to do things like this, jump into a program and then just give the 5 digits that they ask for. So COVID is another example. COVID is an example of where you needed clean financials to know your cash flow to be able to do things. And most people weren't able to do that because they didn't have clean books. And the example that David just gave around that, in terms of the myth, it is just so important, because these are how you operate. And I was talking about the example of the client who I called. He was looking to find someone who supported him in terms of how he thought. But when you have an overall strategy for your business, you're not looking at the end result of what tax strategy can put in to the business to make less money. That's the end result, the tax strategy. The result today is the strategy around cash flow and accounting mistakes, so that you don't make those mistakes. You think about everything we talked about tonight, implement in your business, take it and run. You don't work with either of us, and you take the concepts and run and see where you are and if those are working. I mean, what do you think, Dave?
I agree 100%. And it starts with fundamentals like business strategy. And one of the mistakes I see, and it's surprising, is people working with a chart of accounts that basically came out of the box, and it's not customized to provide reports that reflect their business activities and what they need to know. And
Mhm.
so to me, that's a major mistake, that it's not like a one-time, well, it is a one-time deal, but affects everything. How often when you get a new client are you updating their chart of accounts, Margot?
All the time. So I actually think this is a really, really another important topic. So chart of accounts is how you itemize your expenses in the business on your financials. But not only is important like that, it helps you now maximize your deduction. So if you've been following along, it's the strategies of your business that bring you to the end result. So if you maximize your deductions, you spend the time on the chart of accounts, you don't have to worry about maximizing your deductions because you spent the time on curating your chart of accounts that will give you the end result of maximizing your deductions without doing extra work. It's
Yeah,
simple as that.
and it's one that I could talk about all day long with detailed examples, but we won't, because that's boring and business owners don't want to deal with that. And the fact of the matter is they they need to find a new professional usually. If the business owner's got to be the one who's saying, I need a new chart of accounts, they're probably not working with the right person. And how do you find that out? You talk to somebody like Margot, who can provide more of a full service. Now, again, I don't do bookkeeping. I don't do accounting. I just focus on big, hairy cash flow problems, which I love. But in order for me to fix things, I often have to work with them to get them to restructure their chart of accounts so we can understand what's happening in the business.
So I'm going to say that maybe we're telling everyone your first key point tonight, action point is let us know where you're at with that chart of accounts. Send it to me, better yet, and let me know. Is it the default in QuickBooks? Is it the default in Xero? Or did you actually curate it to support your company?
Yep. And you wouldn't even need to send Margot any of the numbers. Literally just looking at the structure, somebody with good experience can say it's it's never wrong per se, but it can identify small and significant areas for improvement. Is that fair to say?
Exactly, because that goes along with the overall approach here. It's the overall strategy on how you run every day to get the maximum result of your business, to get the profit and pay less taxes. That's where it comes down to. All this work being proactive, not a reactionary position of doing this year end. Absolutely, David. That was literally on point on really how to loop this together. Um, Before I go into the dashboards further, is there something more that you want to share about cash flow at this point?
Um, only if they want to learn more about cash flow, where they could learn more about it if they want to.
Got it. Okay. So if you want to learn more, David and I are, you will see out there another show that we are going to do. We did talk about this because we do feel cash flow is really, really important. It's more about working on cash flow than it is worrying about taxes. Taxes is the end result. Cash flow is the way to work and operate the business so that you get the results, the more profit, the time off with your family, and then you're going to pay less taxes. So
Yeah.
David's information will be at the bottom of the live again. Um, I want to talk about the dashboards for a minute. I talked about this last week, and this week I worked with a lot of people to install them, and it's really been going well. The dashboard system is a way for you to see what it is to work on your business instead of being in the business of the grind. And a favorite component so far has been around the business goals of income because they're looking to see on how they're actually working on income and how it's actually working with the cash flow. So I'll give you a story. So one client of mine, we set the results. He had in his bank account, it was to the tune of $12,000, and he had $7,000 in debt on the credit card. And he's like, Margot, I didn't pay it because I'm worried about my tax debt. What I did was I built in this dashboard a way for you to estimate or guesstimate how much you're paying in taxes monthly so that it's not that problem. So we started to create goals and strategies on how for him to operate. So going into what David said around the chart of accounts, that's what we were doing around the expenses so that it really supported his business. So if this remotely interests you, or if you're still in cleanup mode of back of accounting, but your business is not moving forward, you're like 2 years behind, or like you're thinking about 2024, wherever you are, DM me or put at the bottom of here, actually DM me dashboards, and let's talk more. It is the new way to operate your business. Instead of it being in like 6, 7 different apps, this is a one-way system. I know a lot of people are saying how their softwares are doing it, but they're not set up. And it's not set up the way I created the system. So I want you to have it. And I look forward to sharing it with you. David, thank you for coming on. I really love how this was able to educate our audience. And I look forward to seeing how people, share and what they've gotten from it today.
Thank you, Margot. It's been a pleasure.
You're very welcome. Have a good night, everyone. Any questions, as always, let me know. You guys always reach out and DM. I love it. And we will see you next week. Bye.